Hi everyone. As many of you know, this month at Sagel, we're talking about investing. So in this video, I want to cover dividend stocks. Now, I'm a fan of dividend stocks in general for a few reasons. One, because typically the companies that pay dividends tend to be financially stable, established companies. And that means they often carry lower risk than, say, smaller growth stocks. Two, they're also good for investors who are looking for a steady income. So say, for example, when in retirement and they want to supplement their pension income. But they're also good for younger investors who don't necessarily need the passive income, but want to build wealth and take advantage of the power of compounding. That's because they'll often have the opportunity to reinvest the dividends to buy additional shares of the company. So compounding effect is the key. And if you're not sure what that is, you can go to my website, Sagel, under Your Money/Grow and read all about it. So what are some of the strategies you need to think about when investing in dividend stocks? Well, A, you want to create a portfolio of great companies that have a track record of increasing their dividends, and the dividends are supported by real growth in profits. In other words, you want to make sure that the company isn't borrowing money to pay it, and there isn't a risk that they'll actually cut the dividends because the company is struggling. So let me explain why this is important. I've seen situations where some investors only look at the yield or return when they're thinking about buying a dividend stock. So they'll say, hey Sage, company X pays me 5% yield, whereas its competitor company Y pays 3%. So of course I should buy X, right? Not necessarily. The yield is calculated by dividing the annual dividend by the stock price. So if it pays $1 a year and the stock price is $25, you get a 4% return. If the price drops to $15, the yield goes to 6.7%. But you have to ask yourself why the stock price dropped. Is it because of concerns over its future or something else? Could it hurt its ability to continue to pay dividends? You want to investigate a bit to see if the fundamentals still support the dividend and future increases. That's one strategy. The second strategy is this. Make sure you diversify across different industries and even different countries so you're not dependent on one area of the economy for growth. So for example, many financial companies pay dividends, but that doesn't mean you should buy only bank stocks, right? There are many telecom, oil, tech stocks, and in different parts of the world that offer steady dividends. And a final word, if you don't have a big pool of money to invest in a lot of stocks and aren't sure how to diversify with the dividend stocks, there are a number of dividend and income mutual funds and ETFs that you can look at that will already be diversified for you. So if you have questions, I'd love to hear from you. Send me a message at hello@sagel.com.